And now, folks, we're going over to the other side of the world. We're going over to Asia. We got our man, Mr. John Logan. And, folks, if you haven't test drove yet the daily video that we have on the front page of TFNN, well, each and every day, trading day, John puts a video up. And I can tell you, please go over and watch it, because you really get to understand, number one, what the different markets are doing. Number two, it's free. Number three, you'll start understanding how currencies are moving, how commodities are moving, how the indices are moving. Last week, it was pretty amazing. John had the S&Ps up there twice, oil up there, and gold up there. And if you went over them, you know exactly how dynamic they were and how these numbers were hitting all week long. So that's the daily video that's up there. Inside the actual carousel, what you're going to see is that we have the TAS signal box. And, excuse me, folks. And we're going to talk with John right now exactly about that signal box. John Logan, what's going on?
Hey, Tom. Good to hear from you again.
You too, man. Well, listen, we really appreciate all the work you do. I know. So is it 4:30, 5:30, 6:30? What time is it there?
It's let me check the latest. It's 4:35 a.m. Eastern.
So it's 12 hours. Okay, 12 hours. Well, man, we appreciate you staying up and getting people educated here.
Well, so, I'm sorry I wasn't on earlier. I didn't. It was a vacation for most of the folks on the markets, and I didn't know you were having the show today. So. No,
listen, I know those Bond guys got it made, man. You know what's so funny, John? They've always had it made. Now, John and I have been in the market for a long time, folks. The Bond guys have always had it made. Their spreads are much bigger than anyone else. Their credit cards, when they're working for the broker-dealers. Just so if you don't know this, folks, if a Bond guy does not spend more on his American Express card than he makes, they fire him. Okay? That's the way it goes, man. Isn't it amazing? No, it really is. It's like... So...
And they make a lot of money at the same time.
Yeah, no doubt, man. Let's talk a little bit about the signal. Well, first off, I want to, congratulate you, man. Those calls, in your daily video are pretty amazing. Last week was absolutely amazing. I mean, the S&P twice, the oil market, and gold. And if you didn't see the gold one on Friday, folks, he was saying, John Flato was saying, hey, if gold's under 1285, man, it's dead. It's dead. And sure enough, it's dead. It is, and I can understand why people are saying, how can it be dead when we're in such, financial turmoil? I guess we're not in turmoil yet, but if, the way Congress is running, we may be in turmoil, so.
Well, one of the things we do is try to get confirming factors.
Yes.
As you know, Tom, we've been talking for a while about this. I mean, if things... You're never going to pick the tops or the bottoms, and you kind of want to wait for confirms when it comes to, our profiles. And if you watch the videos, you'll see what I'm talking about with profiles. And I know you're kind of a big fan of those right now.
Yes.
We wait for confirming factors to happen, i.e., we talked about gold getting above, I think, 1285, 1288. And
right.
If that doesn't happen, then you just might need to just stay away from it.
Yes.
And it's okay to miss a move down every once in a while. I think we've been very spot on gold since shorting it around 1750 and coming down into 1200. We talked about it getting back above 1220 to start going long, and then we talked about a ceiling around 1420, 1430. And as these things happen, some of these profiles that we have and these inflection points really kind of dictate. I mean, it's not brain surgery when we're looking at these things, because, they kind of tell the story, and the videos that we do that you're talking about really are just basically a product of looking at the indicators and reading multi-time frame profiles, and when it's okay to be long and not okay to be short, and vice versa.
Yes. Let's, folks, every trading day, right on the front page on the right-hand side, you're going to see the videos right there. Now, that's one product. Let's talk about the TAS signal box, because now you use the profiles. Well, here, explain to the folks what the signal box is first.
Signal box is really, we've got something kind of baked in the cake that's called Vega, and it's more of a red light, green light indicator that tells you, whether to be long or be short, or
yes.
possibly long and be short, I guess I should say. And it basically kind of maps out the grid of weekly, daily, 240-minute, and 60-minute Vega signals. And those Vega signals, the way we have them set within the signal box is if we're above profiles on that particular time frame, it's green. If it's within a profile which is relatively non-directional on that particular time frame, it's gray.
Okay.
And if we're below the profiles on that time frame, it's red. And what really is I think the biggest benefit of looking at it is it tells you when we're coming into inflection points on those time frames, and that means as we come into an unfair high.
Yes.
We've got kind of explanatory videos on all this, as you know, and I think me just kind of throwing these concepts out at one time is a little confusing for people. But if they look at some of the instructional videos that we have, you'll kind of get what is the definition of an unfair high and an unfair low on these profiles. And when price action is coming into those unfair highs or unfair lows, you've got what's called a high probability trading setup.
Right.
And if you've got multi-time frames with multiple time frame inflection points lining up in confluence, then you really kind of increase the odds on top of those high probability setups, where you can, pick a battle, know where to put your stops, the whole landscape of the profile itself, and you also are looking at shorter-term time frames within that signal box to kind of predicate, which is the momentum trade that's happening at the time to really follow, that will guide you into those inflection points, and therefore basically stay on the right side of the market based on some of the signals that are happening in the signal box itself.
And as John said, folks, this is what's so cool on the signal box. So when you're looking at it, there's one thing when you're looking at it, folks, but you can just put your mouse over it, and as John had said, when you're coming up either in or outside of them, well, it's telling you what the numbers are, folks, that you want to be keeping your eye on, which is really neat, man. That's a sweet little tool on a continual basis as to where you stand there also.
Yeah. I mean, really it's basically a product that I, as a trader looking at things and not wanting to miss opportunities, this signal box, you can kind of think of it as a glorified Excel spreadsheet that's going to basically kind of put everything in a grid format and allow you to look at the world that, most of the traders globally look at. They look at the major currency pairs. They look at the copper, the silvers, the golds, the major commodities of the world, and some of the major market indices, the S&Ps, the Bovespa, the DAX, the Nikkei, and it basically kind of lets you see where those particular instruments are relative to profiles. And it's really interesting. I mean, there's a lot of ways to use the signal box, but one of the ways is, as we kind of looked at the commodity world kind of falling off, you'll see money kind of gravitate into the indices section, and some of the currency pairs will start changing in conjunction with that. So you kind of get a feeling based on profiles of kind of where the movement is happening, and you see it in a red light, green light fashion. And, how do you use that to your advantage? I mean, basically a lot of people that we talk to have kind of thrown their charts out the window and basically just trade off the 60-minute, Vega signals that are happening within the grid. And when those, if you're trading on a green Vega signal in the 60-minute time frame, and you see a weekly inflection point popping up on the same level, i.e., let's just say gold is coming down, it's a shorting opportunity on a 6-minute time frame, and we're coming down to that 1288 inflection point on a weekly, it pops up, it tells you, hey, you know what, we're coming into possibly a target here, we've got a high battle point on a long-term time frame, and you may need to take a look at this. And, lo and behold, in that instance, gold just plowed right through that weekly unfair low. And, we basically said, you know what, hey, we've hit a target. We're going to have to wait. I mean, I'm more of a long gold bug probably right now than anybody, and I know that we've had a washout lately.
Sure.
But you have to kind of wait to those inflection points, confirm on multi-time frames to get long again, and that really hasn't happened, and it's okay to be out of the market right now.
No, it is, and it's so cool. You know, when you have folks say, you know, you're in the short term, but you have that long-term point, that tells you, and what's really cool here, folks, it wouldn't matter whether you're a bull or a bear. It tells you a huge amount of information, because, as John said, see, that portion there should not have failed. And if it failed, it's like, okay, man, what's going on? It's a big problem. Listen, folks, you can come over to our website at TFNN, and you're going to see it's right in the carousel. When you hit the carousel, folks, you're going to see the videos right there. Hit the video, check out the video, and check out the signal box. John, you have a great week, safe week, and, of course, we look forward to speaking right back here next week.
Thanks, Tom.
Thanks, man. Have a great one. Have a safe one. You stay right there, folks. We'll come right back.